Hey everybody, welcome to Mortgage Today for Monday, September 16th, 2024, and oh, what a day it was. UMBS were up 5 basis points early in trading this Monday. Stock futures were down 2 points. Bonds were moderately stronger in the overnight session without any excitement in terms of data or headlines apart from Bloomberg article on former New York Fed President Bill Dudley discussing the case for a 50 basis point rate cut. This had a bigger impact on the shorter part of the yield curve, but nonetheless helping MBS begin the day about 5 ticks higher. New York Fed data, aka the Empire State Manufacturing Index, isn't a perennial favorite in terms of market movement capability. It occasionally has a modest impact, but we wouldn't necessarily have expected it to remind us of that capability in the current market environment. To be fair, it didn't make much of a dent in the morning, but volume and volatility at 8:30 were fairly conclusive. It was just under 2 basis points of weakness on the 10-year. The week ahead will be dominated by the FOMC meeting on Tuesday and Wednesday, where the Fed is expected to cut rates. The Fed fund futures have again changed their forecast. The markets are now seeing a 65% chance of a 50 basis point cut, 35% chance of a 25 basis point cut. Last week, the Fed futures were leaning heavily towards 25 basis points. The Fed funds futures moved from about 15% chance of a 50 basis point cut to a 50% chance. So the Fed fund futures moved from a 15% chance of a 50 basis point cut to a 50% chance, so the assassination attempt isn't the driver here. Given that we were in a quiet period ahead of the FOMC meeting, there wasn't any communication from the Fed either. Something spooked the herd, and now they are on a 50 basis point side of the field. The University of Michigan consumer sentiment number was good, so it wasn't that. Aside from the FOMC minute, we get housing data and the NAHB housing market index, existing home sales. We will also get retail sales and the index of leading economic indicators. With the Fed now in a rate-cutting cycle, inflation indicators will become less of a driver of the sentiment. Bonds started stronger, retraced back to unchanged following the manufacturing data, and proceeded to grind out moderate gains by the end of the day. It was a reasonably strong result given the absence of bullish impetus on bonds, but not one that falls outside the range of yields established during the last week's volatile consolidation. Fed fund futures notably rallied such that the 50 basis point rate cut is once again the leading candidate. This is a product of trader ruminations and speculation rather than data. Between Nick Timmeros's article last week and Dudley this morning, the market thinks it's being given clues from insiders. UMBS ended the day up 6 basis points at 101.60. So at 101.60, we're up in this broad range where we don't have a ton of data. We only have a couple of days. But it'd be nice to get some more bad news to get us above that 101.83 mark.